we want to create pregnant money. So what that means is that you want the parent to grow up, your savings, which is a parent, to grow up big enough and invest it so you can start becoming pregnant and creating money babies.
It's awesome that you brought up about that become your own bank book, because
Yeah.
when you was talking about the board and dying after, using the life insurance as a pretty much as a catalyst towards whatever business venture that the other family member wanted to do, it reminded me of a book I read 6 years ago called Family Fortunes, and it's how to keep family wealth within the family for 100 years. Because, like you said,
Wow.
there was an issue, right? After, they say, well, after like the third generation, they squander the wealth away, something like that.
Absolutely.
And that's a problem. And I discussed, I talk to my father often, and I was discussing to him about the issue I think what people have is they have a problem replicating their wealth. So like I said, I'm into real estate. I like real estate, but maybe my son is not into that.
Right.
Right. So how do I transfer that wealth and that business that I'm transferring down and that trust in a way that it will still succeed and fit within my kids? And I think that's an issue slash, I think you got 20 years or whatever you feel comfortable until they get more responsible enough to kind of figure that out. But that's something I want people to also kind of think about, because when we're
Yeah.
talking about these assets or life insurance, trust funds, real estate franchise, stuff like that, or anything that you invest in, the plan is to pass it down, because you're not going to be alive for long enough. So how can you, I guess, properly educate your family? And I guess I would ask you that, what are some ideas that you've come up with or you've experienced to how to properly prepare your family to be good stewards of these assets that you've built by the time you've passed?
Yeah. People ask me that all the time. Do I think it's better to give them the money or give them the mindset? And I'm gonna say both, right? Like we don't doesn't have to be an either or. It can be a both and. You want to give them both the mindset and the money, because the Bible says a good man leaves an inheritance for their children's children. So, but going back to that, like giving your kids options, right? Like 529 plans. I'm not a big fan of 529 plans. I'm not against them, but the reason why I'm not a big fan of them because it counts against the child's financial aid to get scholarships and different things like that. And also, they can only use it if they do attend college or pass it on to another child that might attend college. Well, maybe your child's an entrepreneur. Maybe they don't look to go to college route. Obviously, we want them to go to college route, but if they don't, we don't want to punish them by that and take penalties for that. Like when you save in the life insurance, the wealth creation fund, instead of the 529 now, that doesn't count against the financial aid. It's not a taxable event. It doesn't count against your child's income, and they can borrow it for college and it still continues to grow as if they never touched it. Maybe they want to start a business with that money down the line. And um, on top of that, they have the option to not go to college and still use it. Or you might decide that they don't need it. They've done well for themselves, and the parent might decide that, well, I'm gonna keep this for my retirement money. So you just got options. Basically what I'm saying. So you give them options and then you teach them. Like you have like a family board meeting, maybe quarterly or something like that, where you just literally talk about money. You watch something educational together. Maybe you watch this podcast and you sit down and you say, hey, or you listen to this podcast and you sit down over the family and say, let's discuss this. Let's talk about it. And you call a family meeting and you just open up the dialogue for these conversations. Because I think enough families don't talk about money. Like we don't talk about money, and we should talk about money, because not only like it's not just about the money, it's about them understanding the passion and the heart behind the money, because where your treasure is, your heart will be also. So we need to understand how we're making those decisions. Are we being a good steward of our money? It's about discipline. It's about control. It's about making the right decisions. It's about being charitable. All of those things are conversations that come up when it comes to money, and these conversations aren't being held enough.
Yeah, so I had that conversation with my father where I would say that, money is just a tool, and it
Yep.
only going to make you a bigger version of what you already are. So if you're already, giving a thoughtful person, you'll probably be an even more giving and thoughtful person, right?
Yep.
If you're greedy, then you'll get even more greedy.
Yep.
I think naturally, right, as we see those commas and zeros get added to our bank account, we're like, oh, all right, cool, cool. So naturally that's in us, but not to the point where, like I said, if you're not greedy, you're not going to be like, well, I'm just going to keep it all to myself. So uh, that's definitely something to think about. I want to ask you, So we kind of briefly talked about, real estate and how I would have used it, and that's why it piqued my interest. But let's talk about how you use your life insurance policy to get 422 units of real estate.
Yeah, man, I used it for that and many other things. 422 units of real estate. Um, got a Lamborghini that I paid a down payment with my life insurance policy. I'll
That's
talk about
crazy.
that. Also, a $2 million house that I got was called a no doc loan, so I was able to borrow about 5% from my life insurance policy and put and rent the thing out that pays me $25,000 to $30,000 a month, and I don't even live in the house. Um, I got man, I've used this thing for so many things. It's crazy. I've given out loans like hard money loans,
Hmm.
whereas people was doing 16%. I was saying, okay, well, let me do 12%. And then I wrote out the house as collateral if they didn't pay me. So my money was still growing. And when they paid me back the loan, I got my money plus interest, 12% interest back on that. So becoming your own bank in the it is not really about the insurance. People think, well, it's how you do insurance, an infinite banking system. It's not. It's about the mindset. It's about the mindset of being a wealth creator and learning how to be a wealth creator and only using this as a tool, because a life insurance in itself is not an investment. Life insurance is not an investment. If you structure it the right way, it can be a funnel to grow and for you to leverage to get investments that are going to make you more money than a life insurance would, and you can make your money twice off the same dollar, but it's not to replace investment. So going back, for my real estate, I just borrow the payment against it. I always collaborate. I'm a big believer in collaborate. So when I do a real estate project, multifamily, single family apartments, I'm finding me two or three partners. Whatever my part of it is, I'm going to borrow from my policy and I'm going to start getting the monthly amount. There was one that we paid $1.8 million for. I partnered on that, so I was about a third of that deal. And then the plan was to sell it in 4 years for like double, but we ended up selling it in 18 months for like 3.9 million. So a $2 million profit on that building in just 18 months. And then we took that money. I paid back my down payment into the policy. I took the rest of it. You know what I mean? I started me a whole nother policy with the money that I got from there. So additional policy. So that's one thing that we did. And again, because I was a partner in a collaboration, I didn't have to do the work. I didn't have to fix toilets. I didn't have to do anything. I just showed up for a meeting every once in a while just to see where we were at in the project. And really, that's what it is. Because I'm not a handy guy. I'm not a. I don't know how to. I don't even know how to fix nothing. Give me a screwdriver. I might mess something up. I'm just being real, but I do know how to lead and I do know how to collaborate on deals and let people do what they do best. My Lamborghini, my goal was when I got that Lamborghini, I was going to rent it out on Turo, and I knew it would pay me like $12,000 to $15,000 a month. But the crazy thing is, when I got the Lamborghini, all of a sudden I had a mentorship where I only had six people in it in 2 months. So that was good, but it wasn't like great. But as soon as I got the Lamborghini in one day, 27 people decided to join my mentorship for 5,000. So I paid off half of the Lamborghini in one day just by having it. And I borrowed the money from my life insurance policy to get it started. So technically, none of the money at all was out of my own pocket. I was able to pay back the policy, and then I still got the Lamborghini, and it gives me so many opportunities. I don't even rent it out. But then a $2 million house, again, I got the no doc loan, 5%. That just means that I didn't have to provide a lot of documentation at the time. It's a little bit higher interest rate. But what I did was I paid for the down payment, automatically started positioning myself where I could start renting it out. And now I stay in it most of the time, but I rent it out still every once in a while. But yeah, it works out, man. If you when you learn this game of leverage and how to utilize the life insurance as leverage, you will never look at money the same again, because you could turn any luxury item into an asset instead of a liability if you learn how to work it right.
And that was also another. So I have a frustration when it comes to get financing through banks. Like when I had to get my SBA loan, like
Yep.
grueling process. They want my blood. They want to
Yeah.
know like everything, right? And I hate that. I like the option also with this insurance policy where I could just, you know, probably fill out something, get my money
Yeah.
shortly versus waiting 60
Yeah. Just
days.
sign something. You get it in 2 to 3 business days. Like Even if you lost your job, if the money was there, your credit score doesn't matter. Like none of that matters. You could just get the money. Whereas in the banks, let's say you got a lot of money and equity in your home. You got a job, you lose your job, you go to the bank and say, "Well, I've been overpaying for my mortgage, so I want to take some of that out." They're going to say, "Well, fill out this 15-page application." Oh, you don't have a job anymore? No, you can't. This is our money. You can't get it because we don't think you're going to be able to pay it back. It's like, what do you mean? I've been overpaying on this thing for 10 years. It don't even matter.
Yeah.
Like, you don't control that money. You are rushing to give up control of your money to somebody else. Like, my definition of being debt free is not necessarily paying off your house in cash and being debt free. Is having enough money setting aside in a liquid fund where if you chose to pay off that debt, you could pay it off anytime that you want because you have more liquidity than liabilities. So that's how I look at it. Like, if I can use a debt to my advantage and I can make more money somewhere else, but I got the money to pay it off if I chose to, I'm not in debt. So why do rich people use debt? Rich people use debt to make them rich. What's the guy that was buying Twitter?
Oh, Elon Musk.
Elon Musk. He was getting a loan. He's getting loans. Like, Elon Musk don't need to get any loans. Why is he getting loans? Because he understands the game of leverage. That's how he became a billionaire. He understands the game of leverage. Like, why use my money when I can use somebody else's money? It don't make sense.
Yeah, you're absolutely right. So why would somebody want to have multiple policies? Because you said you took that money and got another policy.
Yeah, I have like 6 different policies, and I do because, again, once you fund it at a certain amount, if you overfund it too much, it turns into a MET, which means it become a taxable event. So if you want to put more into it, your income grows, your money grows, you got to start a new policy so that you're not taxed on it. It doesn't turn into a taxable event. Provide you with that flexibility. So I have whole lives, I have index universal life, I even have a couple term policies as well. So if any agent tells you that there's one that's significantly better than the other, like you got to have term or you got to have this whole life, or you got to have index universal life, then you need to run from them because every single situation is different. Every person there might be a different need for you and a different need for your friend, a different need for your parents. So you got to find out what's right for you.